Good day everyone, we are the Group 7 from BSA2A and today we are going to discuss notes payable. By the way, I'm DM, your reporter in this part. Let's start first by defining what is notes payable. Notes payable, based on its textbook definition, are obligations supported by debtor promissory notes. Debtor, yung umutang at nakasulat yon sa promissory note. Ang promissory note naman ay written note kung saan nakalagay na nangangako ang debtor na magbabayad siya ng utang na pwedeng on demand kung kailan gustong maningil noong inutangan, pwedeng fixed kung ano yung date na napagkasunduan nila. Example, February 1, August 9, September 23, basta may specific date. Pwede rin namang determinable future time, meaning magbabayaran sila sa hinaharap. Like, hindi specific yung date at hindi rin fixed, pero madedetermine mo pa din siya. For example, kapag nag-ani na ng gulay next year, unang ulan ng Mayo, kapag huminog na yung mga tinanim kong prutas. Ang point, hindi man na-specified or na-fix yung date, determinable pa din siya. So, notes payable is governed by the standard of PFRS 9 financial instrument. Since notes payable is a financial instrument, particularly a financial liability. The accounting for notes payable is similar to the accounting for notes receivable. Kasi nagkaroon lang ng switching of position. Sa notes receivable, ikaw yung nagpautang, ikaw yung nagbigay ng pera, that is why it is your receivable. At yung other party ay yung debtor. Siya yung magbibigay ng promissory note. So, pinagbaliktad lang talaga. Ngayon, in this topic, ikaw na yung umuutang at nag-i-issue ng promissory note. So, yung other party naman, of course, siya na yung nagpautang or yung creditor. Initial measurement. So, what is measurement muna? It is the assignment of monetary values kung paano mo bibigyan ng value ang isang liability. Ano nga ba ang rule kung paano lalagyan ng measurement ang financial liabilities katulad ng notes payable? So it is stated here that notes payable are initially recognized at fair value minus transaction cost. Ang sabi, initial recognize. Like kung marirecognize mo siya for the first time, ayan ang gagamitin mo. Fair value minus transaction cost. Pero what is fair value? Fair value is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. It simply means that it is the estimated price at which an asset is bought or sold when both the buyer and seller freely agree on a price. Well, yung transaction cost na ide-deduct mo sa fair value ay yung mga directly cost lang na na-incur sa pag-i-issue ng promissory note. And that's how you initially recognize a notes payable. Fair value minus transaction cost. Note, bago mo measure ang isang financial liabilities, dapat malaman mo muna kung designated by profit or loss ba siya or not designated by profit or loss. Kasi kapag not designated siya, ang approach natin sa kanya ay ito, fair value minus transaction cost. Pero kapag designated siya through profit or loss, fair value lang siya. Walang transaction cost na ibinabawas. Kasi hinihiwalay na yung account ng transaction cost sa fair value kapag designated ang approach niya. Pero normally, ang kadalasang ginagamit ay yung not designated through profit or loss lang. Subsequent measurement. Notes payable that are initially measured at face amount are subsequently measured at face amount or expected settlement amount. Notes payable that are initially measured at present value are subsequently measured at amortized cost. This is simply a rule. Susundan mo lang siya. Na kapag initially measured siya by face amount means yung amount na nakalagay sa promissory note, dapat subsequently measured din siya by face amount, katulad nga ng binabanggit dito sa slide. Pero kapag initially measured naman siya by present value, subsequently measured dapat siya by amortized cost. Susundan lang siya. Summary of initial and subsequent measurement of notes payable. Short-term note, which matures within a year, is initially measured at face amount and subsequently measured by face amount also or expected settlement amount. Pero pwede din siyang initially measured at present value kapag mayroong significant financing component na nag-i-exist. Significant financing component, based on my research, it simply means that the customer made an advance payment. So kapag ganun ang nangyari, present value yung initial measurement na gagamitin at amortized cost naman sa subsequent measurement. So let's proceed to the illustrations. Illustration 1, Short-Term Note. On July 1, 20X1, ABC Company borrowed 1 million and issued a 1-year note payable. The lender discounted the note at 12%. Case 1, Lump Sum. The note is due in lump sum on June 30, 20X2. The effect of discounting is immaterial. So, ito yung journal entries ng ABC Company. On July 1, 20X1, makuha na ni ABC Company yung inutang niyang 1 million. Pero saan galing yung 88%? Ito na yung discounted percentage which equal to 880,000. Then, i-debit natin yung discount on notes payable na 120,000. Kasi kailangang balance siya sa credit side which amounted to 1 million. Tapos, credit yung notes payable kasi nag-increase ang liability. Pero actually, ilalapat natin yung discount payable. Gagawin mo yung 120,000 na interest expense. Pero hindi pa nga lang outright na i-debit mo agad yung interest expense ng 120,000 ng biglaan. Then next entry, by December 31, 20X1, ito na yung end ng reporting period. Kaya kailangan na nating i-record yung interest expense ng utang. So debit interest expense, 1 million times 12% times 6 divided by 12. Why 6? Kasi kung bibilangin mo yung months from July to December, 6 months yung nalapatan ng interest expense, which equal to 60,000. Then credit yung discount on notes payable, which is also 60,000. Ganun lang din yung account sa June 30, 20X2. Same lang din siya. Also, by June 30, 20X2, na-record na yung settlement ng notes payable na inutang ng ABC Company which amounted to 1 million pesos. Case 2, Installment. The note is due in equal quarterly installments starting September 30, 20X1. The effect of discounting is immaterial. So, same problem lang as the illustration 1. Pero iba ng approach. Kung kanina, short-term note, lump sum siya. Dito, short-term note pa din siya, pero by installment mo na babayaran yung utang. So, same entry lang sa una, kung paano pumasok yung utang. Then, by September 1, 20X1, mayroon ka ng notes payable na 250,000. Kung saan nanggaling yon, since based sa problem, quarterly installment mo siya babayaran. That simply means 1 million divided by 4 is equal to 250,000. Bakit nagkaroon ng cash sa credit? Kasi syempre, kailangan nang maglabas ng pera ni ABC Company para bayaran yung utang niya since may due na ang bayaran niya for this month. Pero saan galing yung 48,000 na interest expense sa debit? Makikita natin sa table below the journal entries kung paano inilapat yung 120k discount notes payable para gawing interest expense quarterly. Then note that the fraction used in the allocation are derived from the outstanding balances of the note. Let's go back to the journal entries. By September 30, 20X1, may i-debit ka ng notes payable, then maglalabas ka ng cash na 250,000 for each month's due. Then debit interest expense na 48,000 based on the table below. Then credit discount on notes payable, 48,000 also. Then same lang din yung magiging entry for the month of December 31, 20X1. Yung amount lang ni interest expense at discount yung magbabago based nga sa table below. Then the following entries in 20X2 will follow the same pattern hanggang sa Illustration 2. Long-term note with reasonable interest. Simple interest. kung saan yung interest is computed only on the outstanding principal balance. On October 1, 20X1, ABC Company issued a 2-year, 12% 1 million note payable in exchange for a piece of land. Principal is due on October 1, 20X3, but interest is due annually. Dissect muna natin yung question. Noong October 1 daw ay nag-issue si ABC Company ng 2 years, 12%, 1 million note payable, kapalit ng lupa. Yung principal is due on October 1, 20X3, pero yung interest ay due annually. So, journal entries. By October 1, 20X1, nakuha na ni ABC Company yung land kapalit noong notes payable which amounted to 1 million. Then by December 31, 20X1, end of reporting period, magkakaroon naman tayo ng interest expense and credit interest payable kasi nag-increase yung liability. By October 1, 20X1, maglalabas ka ng cash kasi kailangan ng bayaran yung interest which is due annually. Then after this, same pattern na lang yung magiging entry niya for the next year. Illustration 3. Long-term note with reasonable interest. Compounded interest. Kung saan yung interest ay computed on both the outstanding balances of principal and accrued interest. On January 1, 20X1, ABC Company issued a 3-year, 12%, 1 million note payable in exchange for a piece of land. Principal and interest are due on December 31, 20X3. By January 1, 20X1, na-acquire na yung land in exchange of notes payable amounted to 1 million pesos. Then by December 31, 20X1, record natin yung interest expense, 1 million times 12% interest equals to 120,000. Then, mag-i-increase yung liability kaya tayo mag-credit ng notes payable which also amounted to 120,000. By next reporting period, interest expense again sa debit pero kung mapapansin nyo kung paano siya kinumpute, isinama na yung interest expense sa naunang year. Ganito yung sinasabi kong compounded interest. I-compute mo sila both on the outstanding balance of principal and accrued interest. Then by year 3, isinama ulit yung interest expense noong year 2. Since due date na, need na natin bayaran yung accrued interest na nilagay natin sa ating journal entries which amounted to 404,928. Then also by this month of December 31, 20X3, na-record na yung settlement of notes payable. Illustration 4. Non-interest bearing note lump sum. On January 1, 20X1, ABC Company acquired a piece of equipment in exchange for 100,000 cash and a non-interest bearing note of 1 million due on January 1, 20X4. The prevailing rate of interest for this type of note is 12%. Kung mapapansin nyo, yung given problem, walang present value yung notes payable. So, kailangan pa natin siyang i-compute. Future cash flow which amounted to 1 million. Since kailangan natin hanapin yung present value, mayroong formula na dapat sundin, which is the present value of future amount, PV of 1 peso is equal to 1 plus interest raised to the negative number of period. Ayun yung formula. So, kung susundan natin siya, 1 plus interest of 12% raised to the negative number of period of 3 is equal to 0.711780. Then, just simply multiply it to the future cash flow, then it will be equal to the present value of notes payable, which amounted to 711,780. Then, ipapasok lang natin siya sa journal entry. So, debit equipment, 811,780. Debit also, discount on notes payable, 288,220. Then, credit cash, 100K, and notes payable, 1 million. Then, these pertinent entries, dito lang pinapakita kung paano in-amortize yung discount on notes payable na gawing interest expense. Makikita naman sa amortization table kung paano naging equal yung interest expense sa initial recognition of discount. And that's simply the summarize of illustration 4.
Illustration 5. Non-interest bearing note installment. When we say non-interest bearing note, ang unang pumapasok sa isip natin is this is a zero interest note. or there is no interest at all. Pero hindi pala yun totoo. Ang non-interest bearing note ay meron pa ring interest, and this interest is already included in the total face value of the note. Unlike sa interest bearing note, na kung saan nakaseparate pa ang interest at ang face value ng note. At pag sinabi naman nating installment, ibig sabihin hindi isang bagsakan ng pagbabayad, kung hindi hati-hati siya. Now let us look at the problem. On January 1, si ABC Co. ay bumili ng equipment na nagkakahalaga ng 100,000 pesos cash and a 1 million non-interest bearing note that is due in 4 equal annual installments starting on December 31, 2021. The prevailing interest rate is 12%. So, si ABC Company ay magbabayad ng utang ng 4 na beses yearly. Our initial measurement will be future cash flows, annual installments. To get the 250,000, 1 million divided by 4 years, we will get 250,000. Multiply by the present value of an ordinary annuity factor of 1 at 12%, that is the prevailing interest rate, and which is the period, gaano katagal? 4 years. Para makuha ang present value of ordinary annuity, ito ang formula. 1 minus 1 plus rate times n all over rate. Sa basic calculator, press 1 point rate, press divide button twice, then press equal button and m plus, equivalent to the number of periods, and then press MR. After nun, makukuha na natin ang present value of note payable sa January 1, 2021, and that is 759,337. Ito naman ang ating journal entry. On January 1, 2021, equipment, 100,000 cash plus the note payable on January 1 is 759,337, a total of 859,337. Discount on notes payable. So, ang face value ng note natin ay 1 million minus the present value of note payable, 759,337. That is 240,663. Then credit cash, 100,000. Notes payable, 1 million. Current and non-current portions of a note payable. So, kapag ang ating mode of payment ay installment, meron yung current and non-current portion. So, paano natin ito malalaman? Titingnan lang natin ang ating amortization table. Ang current portion ay makikita natin kung magkano ang amount ng amortization sa susunod na taon. So, kapag tinanong, how much is the current portion on December 31, 2021, titignan natin yung amortization noong or sa taon na December 31, 2022. That is 177,945. Same with the non-current portion. Ang non-current portion naman sa December 31, 2021 will be 422,512. That is the present value on December 31, 2022. Illustration 6. Non-interest bearing note installment in advance. So this time, nangyari yung unang payment ng installment noong January 1, 2021. So yung beginning. While the succeeding installments are due every December 31. So katapusan naman yung mga sumunod na installments. Let's do the initial measurement. Future cash flows, annual installments, 250,000. Multiply by the present value of an annuity due, factor of 1 at 12% times n equals 4. Annuity due ang gagamitin natin at hindi na yung ordinary because nagkaroon ng installment in advance. So, ang formula sa annuity due is 1 minus 1 plus rate times N over rate times 1 plus R. Ang present value of note payable on January 1, 2021 is 850,458. Below are the journal entries. So, noong January 1, 2021, ang equipment ay 100,000 cash plus the present value of note payable, 850,458. That is 950,458. The discount on notes payable is 1 million. Ito yung nasa face value ng note minus the present value, 850,458. That is 149,542. Credit cash, 100,000. Notes payable, 1 million. And i-record din natin ang naging advance payment for the installment. January 1, 2021, notes payable, 250,000 and credit cash, 250,000. Illustration 7. Non-interest bearing notes, semi-annual installments. Pag sinabi natin semi-annual installments, meaning 2 beses nangyayari yung payment sa loob ng isang taon. On January 1, 2021, si ABC Company ay nag-issue ng 3-year, 1.2 million non-interest bearing note payable due in equal semi-annual payments starting on July 1, 2021. The prevailing interest rate is 10%. Ang rule dito, ang N or period ay imumultiply mo by 2 dahil magkakaroon ng 2 payment sa loob ng isang taon. Ang interest rate naman ay i-divide mo by 2 dahil interest rates are normally expressed on a per annum basis. Now let us look at the initial measurement. Future cash flows, semi-annual installments, 1.2 million divided by 6. Dahil yung N natin na 3-year times 2 will be 6. So that would be 200,000. Multiply by the present value of an ordinary annuity, factor of 1 at 5% dahil ang effective interest rate natin is 10%. So, ang gagamitin natin ay 5% and equals 6. Makukuha natin ang ating present value na 1,015,138. Let's prepare the subsequent measurement, the amortization table. January 1, 2021, the present value is 1,015,138. July 1, 2021, mangyayari yung unang payment, that is 100,000. Interest expense is 50,757. Amortization, 149,243. And the present value of 865,895. The next payment ay mangyayari sa December 31, 2021. And ganun din yung gagawin natin sa mga susunod na payment. Mag-i-start on July 1, mag-i-end in December 31. How are we going to compute for the interest expense in 2021? So, kukunin natin yung payment noong July 1, 2021. Yun yung start, that is 50,757. And then, noong December 31, 2021, 43,295 will get a total of 94,052 interest expense. Illustration 8. Non-interest bearing note, non-uniform installments. So, this time, hindi pare-pareho yung amount ng ibinabayan. Let us look at the example. Noong December 31, 2021, 600,000 pesos yung binayad. Noong December 31, 2022, 400,000. On December 31, 2023, 200,000 with a total of 1.2 million. The prevailing interest rate is 10%. So, ang rule naman dito, ang annuity factors ay ginagamit lamang kapag ang cash flows o ang ibinabayad ay pare-pareho ng amount. Kapag magkakaiba kagaya nito, gagamitin natin ang present value of 1. Let us look at the table. Merong 4 columns dito, date, cash flows, present value of 1 at 10% times N equals 1 to 3 and the present value. Para makompute natin ang present value of 1 at 10%, sa ating basic calculator, press 1.10 press the divide button twice and then equal sign. Makukuha natin yung n equals 1, that is 0.90909. And then sa pangalawang pindot natin sa equal sign, makukuha natin yung n equals 2, that is the 0.82645. And sa pangatlo, ang n equals 3, the 0.75131. And para makuha natin ang present value, just multiply the cash flows by the PV of 1. Subsequent measurement. So this is the amortization table. Same procedure lang sa paggawa natin ng amortization table. Next is variation. First installment payment due in advance. So this time, magkakaiba yung amount na ibinabayad. Tapos, advance payment din yung first installment. On January 1, 2021, nagbayad siya ng 600,000. January 1, 2022, 400,000. January 1, 2023, 200,000. A total of 1.2 million. Initial measurement. Ang pinagkaiba lang nito ay ang PV of 1 at 10% and is equals to 0 to 2. Bakit? Kasi nagkaroon ng advance payment. Therefore, wala pang discount na marirecognize on January 1, 2021.
Loans payable are accounted for similar to notes payable. However, loan transactions normally involve transaction cost. Recall that financial liabilities are initially recognized at fair value minus transaction cost. Origination fees. It is an upfront fee charged by a lender to cover the cost of processing the loan. It normally comes in the form of a service fee, which is a percentage of the principal amount and is directly deducted from loan proceeds released to borrower. Origination fees are deducted from the carrying amount of the loan and subsequently amortized using the effective interest method. Illustration: amount of loan amortization. You want to acquire a car with a cash price of 2 million pesos through a 12-month auto loan that requires equal month-end payments. The effective interest rate is 12%. Requirements: compute for the following: A. Amount of monthly payment. B. Total interest expense on the loan. Yung PB factor and yung present value. So, ang present value is 2 million at yung present value is compute natin ng 1 plus 1% raised to 12. Yung 1%, dinivide natin yung interest rate dun sa months of payment natin, which is 12 months. So, ang answer is 11.25. Then, divide natin yung 11.25 sa ating present value na 2 million. And yung makukuha nating answer is 177,697.58. So, ayan ang magiging monthly payment. Para naman makuha yung interest expense, yung monthly payment, multiply natin siya sa number of payments on the loan. Then, ang answer is 2,132,370.96. Then, less natin yung 2 million na present value. So, ang total interest expense is 132,371. Nakita natin dito sa table yung 12 months computation ng interest expense. So, yung present value ng 2 million, i-multiply siya sa 1% na nakuha natin kanina. So, makakakuha tayo na ng sagot na 20,000 para sa first payment. At pag nabuo na yung 12 months, ang total is 132,371. Secured loans. Meron itong collateral security para sa mga lenders na pwede nilang kunin sa borrower in case na hindi sila makapagbayad. Example na yung mortgage loan. Dito yung mga real property. Example na yung house and lot, buildings na pwedeng kunin ng isang bank if ever na hindi makapagbayad yung borrower. Next is chattel mortgage naman. Ito yung mga movable personal property ng borrower na pwedeng kunin ng bank katulad ng sasakyan, alahas at mga livestock.
credit
So,
lines.
ang example dito is 1 million yung maximum amount na pwede mong i-loan. Pero ang kailangan mo lang ngayon na pera is 500,000. Ang mangyayari is, yung 500,000 lang muna yung bibigyan nila ng interest, hindi yung 1 million.
Commercial paper.
So, ito yung ini-issue ng isang firm investors kapag kailangan nila ng pera. For example, kailangan ng firm ng 100,000 for business funding. So, yung firm itself, mag-i-issue siya ng commercial paper na 101,000 in exchange of 100,000 in cash. So, yung 1,000, yun yung interest payment dun sa ginawa nilang commercial paper.